Good morning everybody, this is Lara from Pure Elliott Wave with your Monday to Friday update for Bitcoin, Ethereum and XRP. I am sorry I didn't get this done yesterday. It was a horrible day and something had to give, and that's what had to give. But here we are, and it was a pretty much a nothing day anyway, so I'm going to give you some big picture updates today. Let's take a quick look at Bitcoin at the weekly chart level. The last completed weekly candlestick, important to note, it's a hammer candlestick, and support about 41,100 has been repeatedly tested and is holding. This hammer candlestick pattern, after a little bit of downward movement, suggests that we may have a sustainable low in place. Look for next resistance at 48,000. Now the other really important and rather obvious thing to note from this chart is the series of higher highs and the series of higher lows. This is your basic definition of an upward trend. One of my maxims is assume the trend remains the same until proven otherwise. Assume the upward trend remains the same until it's not, until it's changed. In order for that pattern to be broken, we would have to see a new lower low previous to the higher high. So that would be all the way back down here. If we saw a lower low below 24,919.26, the low of the week beginning 10th of September 2023, then the pattern of higher highs and higher lows would be broken and we would have confidence in a trend change. But before that, ADX at this time frame would probably indicate a trend change, and I'd go with that. Looking at most recent volume, the last strongest volume was an upward week, although the candlestick closed red. It's pretty obvious that as price was rising to the last high, volume was increasing. So volume is starting to return to this market. At the weekly time frame, ADX is now very extreme, but it's not as extreme as it can get for this market. And I've looked back past with this one on past videos, and I've showed you how ADX at the weekly time frame will reach very extreme very early on in a strong bullish run for Bitcoin. RSI is neutral, as is money flow. There's a long way to go before these three, ADX, RSI and money flow together, reach a very extreme look. This is actually a look that's normal relatively early on in a bullish run for Bitcoin. Along with volume returning to the market, volatility has been returning to the market as measured by ATR, showing an increase. This is a really bullish look for Bitcoin. Technicals on the daily, if we have a low in place down here for the 23rd of January, it's very, very early days. I would not expect real volume and volatility to return in this new bullish run for maybe about 2 or 3 or 4 weeks yet. Look for next resistance along the way up at 44,700 and after that 48,000. A hammer candlestick pattern at the low on both the weekly and daily time frames suggests that this low is intact, especially now as we are getting a follow through with upward movement. The last completed session again has a bullish long lower wick. Price was rising up to this candlestick here, corresponding to this volume bar, and then as price started to fall, a sharp increase in volume, and then the last completed candlestick is actually a downward movement, although the candlestick closed green, so price was falling of its own weight. We can't draw a conclusion on the current candlestick because it's still in the morning. At the daily time frame, ADX is declining and the DX lines are whipsawing. This is typical of either consolidation or a flux in a change from a trend in one direction to the other. RSI is neutral, as is money flow. A long way to go before ADX, RSI and money flow again reach extreme. At the highs, there was double bearish divergence between price and RSI and price and money flow that could now be resolved by the following downward movement. The bearish result of that bearish divergence could now be complete. Price is falling along with a decline in volatility, whereas previously when price was rising, volatility was increasing. Volatility for this market remains to the upside. That's important to remember. This market has a very strong bullish bias. Stepping back and looking at the big picture for Bitcoin at the monthly time frame, this market is very obviously in an upward trend. It has a series of higher highs. It has a series of higher lows. There is a strong bullish bias to this market. This is the last higher high. In order for that pattern to be broken at this large time frame, in other words, in order for any analysis that is extremely bearish and expecting a big bear market to continue for Bitcoin would need to see a new lower low below the low of the month beginning March 2020. Its low was at 4106.98. That is the last higher low within the pattern prior to the higher high. Now that's a long way away, so we'd probably have indications from volume, range, volatility in ADX before that happened, if indeed a huge bear market is continuing. But what's very, very obvious from this chart is from November 2022, price has been in a bull market for over a year now. Assume the trend remains the same until proven otherwise. For the short term, volume is showing a really nice steady increase at the monthly time frame. It's not nearly as strong as it was back in December 2020, but if my analysis is correct, this is the early stages of a bullish run, and we're starting to see some parabolic growth in price, and we're starting to see a steady increase supporting it from volume. That is the look of a very early stage in a bullish run. This is not the look of a bear market rally. And finally, the only other indicator I'm going to look at today on the monthly time frame is ADX. I rely very heavily on ADX because it's important to know what state the market is in. Is it trending or is it consolidating? There's only two market states, and it's important to know when it's trending and what direction it's trending. ADX is a really, really good indicator for this. The strongest signal ADX can give is when the black ADX line rises from low levels and below both DX lines, reaches 15 and moves above with a positive slope. This is not the strongest signal ADX can give. It's risen from relatively low levels, and it's risen from below both DX lines. It has a positive slope, it's above 15. The positive DX line is above the negative. ADX tells us at the monthly time frame that Bitcoin is in an upward trend, and that fits with what we see price doing on the chart. The thing I want to draw your attention to again here is that this is the strongest signal ADX has ever given for this market at the highest time frame with all of its price data. Here it indicated an upward trend, but the ADX line was not at such a low level. Here the ADX line is rising up from the lowest level it's ever been for this market at the highest time frame. The higher the time frame, the greater the weight we give this signal. This is an extremely strong bullish signal from ADX. My main Elliott Wave count for Ethereum expects a third wave at 5 degrees in its very early stages. I've drawn this best fit channel, and I expect the lower edge to provide support. The small downward sloping orange channel contains the pullback I've labelled Minuet 2. It is now breached by upward movement. Price had backtests of support, may now be moving up and away. Typical behaviour of price around trend channels. A new high above 2455.87 would add confidence to this Elliott Wave count. The Fibonacci ratios I'm using for Ethereum are not as extreme as ratios I'm using for Bitcoin or XRP. I'm going to use the extreme Fibonacci ratio of 11.09. My target for minute 3 would be 11.868. My target for minor 3, 13.325. Alternatively, minute wave 2 could be continuing lower. This is an alternative wave count. It has a lower probability. Minuet wave B is a 2.09% correction of minuet wave A. It's important not to apply a log function to that, so I've switched to an arithmetic scale here to check this number. When wave B within a flat is longer than twice the length of wave A, the probability that a flat is unfolding severely reduces, and that's why this is an alternate. The other problem I have now is from here to here, minuet C must complete as a 5-wave motive structure. That should be labelled 1, 2, 3, 4, 5, and here subminuet 4 lasting 7 days is much longer in duration than subminuet 3 lasting 3 days, nearly twice the duration. It's common for fourth waves to be more brief and shallow than second waves, rather uncommon in cryptocurrencies for it to be the other way around, so the probability of this wave count is further reduced. Subminuet 4 may not move into wave 1 price territory above 2455.87. That's why that price point is confidence for the main Elliott Wave count. So even if this Elliott Wave count is wrong, it still has utility in telling us if we can see a bearish wave count, and this is the best I can see at the moment for the short to mid-term for Ethereum, at what price point is it invalid? That adds more confidence to our bullish case. So that's another reason why it's really a good idea to consider alternate Elliott Wave counts. Technicals on the daily for Ethereum, overall it's moving higher, found resistance at 2,400, was unable to break through, bearish upper wick here, bearish lower wick here. Today I'd expect overall upward movement. Let's see if price can close above 2,400, possibly early next week. As price was moving higher to resistance at 2,400, volume was pushing price higher, and now price is falling of its own weight. ADX is now declining at this time frame. There is no clear trend anymore for Ethereum. RSI is neutral. Money flow is neutral. There's a very long way to go before these three reach an extreme look. There's plenty of room again for a trend in either direction to develop. ATR is declining as price moves slowly up off the low. It was strongly declining as price was falling and previously increasing as price was rising. Volatility remains to the upside. For XRP, I've been struggling with the wave count for this movement here. I'm pretty happy with the wave count up to here, a leading expanding diagonal for intermediate wave 1, complete at the week beginning 9th of July 2023. Following that, I'm going to consider, is intermediate 2 complete over here, or is it going to move lower to be a more normal depth? It's very common for big second waves within cryptocurrencies to correct from 80 to 90% the depth of the first wave, which in this example would give us a range from 0.40954 to 0.34447. Intermediate 2 may not move beyond the start of 1, below 0.2794. The target for primary 3 remains the same. 15.66 times the length of primary 1 would be achieved at $29.01. That ratio is not a Fibonacci ratio. I have taken that from previous impulses off to the left of the chart, which I've analysed at the monthly time frame. That's the previous length of a big third wave in relation to its first wave. So if we see that relationship exhibited again, then that would be a potential target. My main Elliott Wave count, or actually I'm not going to label it main and alternate, I'm just going to say I've got 3 daily wave counts today for XRP. The first idea considers intermediate 2 to continue lower as a big zigzag to reach a more normal depth. If that's the case, 5, 3, 5. Minor wave C needs to complete as a 5-wave structure, beginning with 1, 2, 3, 4 overlapping first and waves, needing to move below the end of the first wave far enough to allow fourth waves to unfold and remain below first wave price territory. 1, 2, 3, 4, fourth wave, consolidations or bounces along the way down toward the target zone. But what if intermediate 2 is not continuing that much lower? It could be continuing just a little bit lower as a single zigzag, 5, triangle for B, and a 5-wave ending contracting diagonal to move lower. So this wave count expects minor C to just move a little bit below the end of A at 0.4456, not too much, to move below that point to avoid a truncation. Truncations are very, very rare, even within cryptocurrencies. So this is slightly bearish, but not as bearish as the first wave count. I wanted to see though, could I see intermediate wave 2 complete? And yes, I can. It could be complete down here as a zigzag, and I have used this wave count previously. If intermediate 2 is complete there, then minor 1 could be complete here, and minor 2 could be complete as a double zigzag, W, X, Y. And here minor 2 is just under 86% the depth of minor 1. But intermediate wave 2 was 74.5% the depth of intermediate 1. That's really deep for a normal market, but not as deep as is more common for cryptocurrencies. But still, 74.5% is still actually okay, so that's still reasonably acceptable. So this is an entirely possible wave count. For all of them, the price point that I want for confidence in this wave count is a new high by any amount at any time frame above 0.6236. At the daily time frame, technicals for XRP, there are now 6 hammer candlestick patterns around the lows with support about 0.4875. We've got 1, 2, 3, 4, 5, 6 hammer candlesticks. This one's got a little bit of an upper wick, but that lower wick is so long, I'm going to say this is close enough to call it a hammer candlestick. So for XRP, it's looking increasingly likely that the lows may be in, and that's why I developed that last Elliott Wave count. Volume was pushing price lower slightly, but overall as price is basically moving sideways, volume is declining. That's normal for a consolidation, and consolidations within bullish runs are absolutely normal to be expected behaviour. ADX still indicates a downward trend as price is moving sideways and slightly slowly lower. If there has been a trend change, it's going to take a while for ADX to catch up. It's based on a 14-period average, so it may take at least a couple of weeks to turn around. RSI is neutral, didn't quite manage to get oversold. Money flow is neutral, didn't manage to get oversold, but they both got pretty close. ATR is overall declining as price moves sideways. That's it for me today with your update, and I will see you all again Monday.